10-year note yields move higher midweek. Today trading up to 436 before closing out at 434, up about 2.5 basis points on the session. Now, early in the day, we had the durable goods orders, which came in lower than last month, but not quite as low as expected. Likewise, we had a couple of auctions. We had a 2-year note floating rate auction as well as a 5-year note auction, two of this week's issuances from the Treasury. Ultimately, yields moved higher for the third time in the last 4 days. Still kind of wavering after that big move higher on Monday, which took us to the weekly highs, but ultimately have stagnated since then and remain up roughly about 10 basis points on the week, but haven't seen a whole lot of movement since Monday afternoon. Again, seeing yields move higher today, closing out at 434, up about 2.5 basis points. Now, what does this mean for volatility? Well, check out that CVol index over at cmegroup.com. And you'll notice that since March FOMC, volatility has been kind of drifting lower. We started to see things level out earlier in the week, and now things are really slightly starting to uptick in vols as yields are moving higher and some of those global trade tensions are starting to heighten as well. So we're starting to see volatility move higher after it has moved lower over the last couple of weeks. Lastly, let's talk about what we have tomorrow. Tomorrow is Thursday, which means we get our in-the-moment look at the job market via the claims numbers. We also get the third revision to fourth quarter GDP. We'll get some housing data, and then we get a 7-year auction to close out this week's issuances.